Hello and welcome. Time for a bonus video for tonight, which is the 8th of April 2019. My name is Derek Allbets Trades, and of the like within each his own risk and their own reward. For the time being, there will be a 50-day simple moving average, which on VTC Vertcoin, a little cross below it and now back up to it, yada 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 kind of stuff. And this is most certainly an average a lot of traders use. And I don't know, I mean, the whole point of me saying this video is I think the reason why I keep doing them is because I really take pride in having most certainly a very unique, different decision, like different outlook on how I view and present the my ideas on so many different fronts. Not only with the Fibonacci, it was mainly going to be Fibonacci in the 18, but even the trading strategy in itself. Now, one of the reasons I only use those is because putting too much really eye clutters it for myself. I really don't like too many indicators overall. I like how the 18 flows within it. It's to me the perfect number to use. Like 20 would work out well enough as well, but and then going too low, 12 is just too low. Although adding the 50 in here, you do see situations of more symmetricalness towards this, but I already see how breaking above the 18 established a leg higher and having this retest again and then coming back, it's been lower hiring it. We have a resistance line in here. It's still attempting and so far successfully this bull run move higher, all that kind of stuff. And let's take a look at this on the daily, the hourly, because this thing has just taken off. And, this is a bad luck one for myself. And, what, so be it. My last buy was like 11.3, 11.2. After my last sell before was like 14. And then I had my 8,500 buy. It wasn't even close, so it's like whatever. I was looking to buy down here. And that obviously didn't happen. So I'm not looking to sell until probably up again. I think, well, I got 14 or so. So nothing much is happening from my end here. Now, the reason why I'm going for larger volatile moves is because of it's a terrible coin. As far as I think it's 1,000 confirmations, 26 hours one time, and then it took like 23 the next. Yeah, pretty rough. Let's take a look at Bitcoin. And I've already talked about its story in the earlier video, so there's no need for me to state much more. I guess on the daily chart with the 50, we can see here it wasn't quite resistance here. It just stayed within this, had a failed breakout above, and a little bit of a leg lower in here with resisting it. Got up to resistance along here, as with the Fibonacci coinciding. Hung around with it, or resisted it for a while, but it supported nicely within it. Got above it and didn't quite find support at it, but it's more of a lagging indicator, as you can really, to me, I can see how much of a lagging indicator a simple 50 is versus the front weighted uh, moving averages. So within this video, what am I going to get? I'm guessing maybe 150 views, 200, and I don't know how to explain it, but it is it is as it is. Maybe it's because I bring such a unique approach. Maybe it's so difficult to understand. I can't figure it out. Where I see there's people out there with $20 Patreons that have like 1,000 people that are really popular. And I've just even watched a recent video about a call for this, as it's like up too much in resistance area that like it's just got to go down. Oh, let's take a look at it. It's on the weekly. Yeah, the 50 week moving average. It really doesn't have much of a track record for history on this. It's really the second time in its history this is doing it. Last time it hit it, it pulled back to a higher low and then it got above, which it would surprise me if it did that, only because of the fact that it's now been day 3, 4, 5. We're on day number 7 since the event, and probability odds to me within this Fibonacci. Well, it's telling me that this resistance area didn't do it. And it only was short-term support for 2 following days, and the uptrend, the resistance in here. Yeah, I suppose there's a chance it could go down, but there's also a chance that the Columbus Blue Jackets will win the Stanley Cup as well. Anyway, let's. I wrote some notes down, and it started off with 50-day resistance, and I put that in, and I was just writing a whole bunch of stuff down. Stochastics, RSI, Bollinger Bands, blah blah blahs, and this again, as I was stating, I really like to simplify things as much. I even made a unique one. I used to call them just an upper and lower bands, and I don't even like them anymore just because it's just too much to have. And I can tell those upper bands and lower bands key times when I have key breaks on my 18. So my game is Fibonacci. 0 in 1,000, probably even 10,000 traders use it. Maybe 1 in 10,000, because I'm definitely one. And maybe some people on this channel do as well. And my game is a front-weighted 18 average highs and lows. Again, 0 in 1,000. I mean, this is something I just figured out back in like 2009. And I realized on like freestockcharts.com that I could pick not just the close, but the high and the low and the open. And I was thinking, well, why not put the highs and lows together? And it has never left since I started it. My game tries to make a story of markets, and that's what other people do as well. But of course, I'm using information nobody else uses. And it's interesting because everybody says, and when the teacher that I started with, Brian Shannon, talks about the 50-day and the 200 and all this stuff and how he uses it only because other people use it. And sometimes that's just exactly why they work so well. Yeah, with Fibonacci works with 0 of 1,000 people use it. And of course, you have to use it correct because most people don't. I suppose maybe 50 in 1,000 or 200 in 1,000 traders would use logarithmic charts when they're required. And on Bitcoin and all these large volatile moves, they're always required. So that's one of the things that was said in a video that stating that Bitcoin is likely to go to 3,700, and well, I have a target of 64. So I just find it interesting how two veterans in the game, both with very good mathematical ideas, have interesting ideas in different directions. Because yes, I do think a pullback will happen at some point. And if there is going to be a pullback, well, I got 4841, and below that 4098, and below that is even 37. So I think if there's going to be any type of pullback, well, short term or overextended, definitely 4841 or 4800, that 47, and in this 18, that's a no-brainer that it could do that. And even just a little bit fill this empty space. And potentially, when I look on the weekly chart, I know there's all these lines in here, but coming back to where it came from, which is now 42, piercing into the 18, which is 38. I think 37 is an aggressive pierce extra to where my level would be when the pullback happens. As I look at it within my view, of course I use the 18. It had the sideways move. Now it's doing that step to revert the trend. It's most certainly went up high enough to establish resistance. For 48 was large enough, and 52 is even higher. So when it's ready to go down, and that's the key one, when it's ready, just because a market seems like it's up too much. When you're trying to short markets when they do the stuff like this, it's definitely a fool's game. But I look at it as in, okay, now it's got to have this 18 correction. You've been in such a long bear market. And that test, whenever it's going to happen, is just going to be important. So each time, every time it goes up higher, well, this will rise with it. And the area I really want to see it hold will most certainly increase with it. And this big line at 4100 to me is that really, really big area. So 37 would be a pierce below it, and a pretty large one when it's that line below it. So I think that's an aggressive play when you're using another deeper Fibonacci, considering how spectacular 4100 was as a level of resistance. To me, of a good gain higher. If there's going to be support, it matches up with the 18 highs. It most likely would match up with the 18 lows, given it probably. I mean, if it does it this week or next week, you're talking about a big red candle down, like the Homer Simpson head shape formation, which are market happenings, things that can happen. That with markets going down slower than they go up, which is opposite of traditionals usually, I would think if we're going to have a test of 41, the more likely event is that it's going to be shorter in time, like 20 days maybe. It would just, but you never know. And that would be like a couple of weeks on here. But because it didn't resist where it's supposed to, I look at probability odds from here to its exact opposite. So therefore, where did I write that? I'm saying it's more likely 64 next over 4,147. Now, why did I choose 4,147? Because it's the polar opposite move from where we stand today, as far as percentage gain and on both sides, for both an up or a down move. So therefore, if you were to make like an over-under fair number, whatever you go up, basically, if you're doing a 20% up, you do multiply 1 minus the gain you're doing. So if you're doing like, say, 24%, then you multiply your price by 0.76. And therefore, this is, yeah, going down here, because of how it's played, I think it's more likely that it goes up towards here. So therefore, what's a 50-50 odds? It's almost like a game if I was just to try to just use my math brain just to stimulate it more than anything, because there's nothing more else for doing it. But that is, okay, so what's got the equal chance of this? Meaning, if there's the same chance of having a gain right now of 1,100 points is a reduction of how many as what would happen next, 50-50. And most certainly, I think it's more likely that we would have a comeback here to 48-41 than it would be a move to 64. So I think from the way I play the game, looking at it, I think it's more likely, yes, that this would hit first than the 6th. But that mathematically it should. And it's more likely it'll hit 63 than it would hit 41. So what number in between would it be? And I think that's exactly what it would be, is something around 45, 44, 46 in that area. And you know what? Maybe it is more likely. And that's an extreme situation whenever you can say it at this spot. But maybe it's more likely that 6,400 is the next price point compared to a large pierce below, which I would probably deem around 47.24. And I'm going to go the highest I can below this level, because and when you think about math like that, I know that the whole thing is that's really big on risk reward management, especially if you like to make those kinds of trades. Okay, if I'm going to have a stop below here, this is my risk. My reward is selling at 64. Therefore, if I win this even half the time, if I do this type of bet 20 times over and I win 10, I'm going to be profiting. And that's just measures, of course, risk reward. I didn't plan on saying that for this video within it. As far as Litecoin's concerned, there's even interesting thing about this is, and I'm just looking at the thumbnail. The price targets were 37 and 60. Again, I just find it interesting how this mathematical game of trading coins, totally mathematical. I mean, why wouldn't you use it when numbers and price and only price pays? I don't see why you wouldn't want to use it. High divided by low to the exponent of the Fibonacci numbers, multiply the low. I don't understand why people like high minus low multiply Fibonacci percentage plus the low. I don't get it. That's especially when you look at the mathematical details of how the exponential Fibonacci is calculated. And when you have charts like this that go from 400 down to 2284, it's damn important to use the exponential one. If we're talking about day trading stuff and we're on the 15-minute time frame, oh, the Fibonacci between 8680 and the Fibonacci between 8980. Well, if you calculate them both, they'll come about the same. When the volatility is nothing, they will. But when they're extreme, they come up so I mean, so they'll look at Fibonacci points, and oftentimes they'll see ones that are just mathematically incorrect, or they'll see, oh, this is the 38.2 or the 61.8, and it's the opposite, meaning they I mean, what does the non-log chart look like? Yeah, something like this. Yeah, so they'll put up thing, oh, there's 38.2 at, say, I'm just whatever. Basically what I'm saying is when they see oftentimes I've seen when they see the 38 or the 61, I've seen the opposite many times before the uh, when the scaling is just so off. But I find it fascinating more than anything how such really a simple mathematical equation when when I say simple, how I mean, I have seen some advanced mathematics in my time, and that is nothing. I mean, it's a joke compared to how advanced some mathematicians calculate. Because I idolize some serious, serious ones that I'm like, wow, you're smarter than me. Wow, you're smart, kind of deal. And a lot of times people use those Fibonacci numbers because, well, one, they don't understand Fibonacci. Two, that's just what the chart has, and the Fibonacci sucks on this program, but it would do it the exact same, high minus low. So now we have all these big companies that do charting software, and they calculate it wrong over and over and over again. Yet they call it Fibonacci. Well, that's because they use a 38.2 and the 61.8. Okay, those are Fibonacci percentages, yes, and 50%. I mean, it's really a 50% retracement. It's not a Fibonacci number. And I've even seen some weird numbers. I'm like, that's not a Fibonacci number. Because when I bring my calculator up, and I was using this to calculate some of those prices from before, and I multiplied this number over and over again, that's where we get the 38.2. See, there's no 0.5 in there. There's no, there's no 5. And then you get the 23.6, 15.4, I think, or 14.5. 14.5, I mix those numbers up. 10 point something percent, or 9.0, 5%, 5.5, so on and so forth. And how they don't get it, that surprises me. Again, I come up here, I'll put in like 150, 200 views. That's if I do good, 200 views. So like, wow. And that's more fascinating, more than anything for me. Because I'm letting the free market, if you will, decide how many views I get. And maybe that's the reason why. Because I spend like no effort in advertising this in any way, but it's available via search. And what surprises me even more is, okay, well, that's just because they're not finding it. And then that would mean I wouldn't get too many subscribers either. But those numbers keep going higher, so you would figure that on a day by day, week by week levels, that my views would be in an uptrend because every week I would have 5, 6, 7 new people or whatever that are like, yeah, I'm going to subscribe to this channel. And again, that's like, okay, so be it. And yeah, and I'm just ranting on for quite some time. I did have a request, so let's take a look at that. I think it was Guppy, G-U-P. I haven't traded that in a long time, probably not since 18. and even not much in 18. That thing has been down for quite some time. And I got my log scale on, but when you look at this, okay, what's 50% off from 14,000? 7. So this is 50% off. 50% off from 7 is 35. 50% off is 18. And just from 18 to 467, that's almost a 4x move there. And that's like nothing compared to just a terrible log scale. Let's take a look at this daily. Well, there's one thing I notice. It's not as good as ApeCoin, but it's decent. What's his volatility for? 415 to 512. 100 points. 416 to 560. 150 points. That's about 30%. Then from this little 458 to 600. 150 points. That's about 30. And then this move here on March 29th, that was from 500 to about 600. That's about 20%. A couple of days ago, 430 change to 570 change, 200 points. That's about 30-40%. And they do happen quite often. If you are looking, okay, this chart, like ApeCoin again, there's so many coins that you have no choice. But if you want to maximize your return as a trader, but to have sell orders in place. And look how important sell orders are over buy orders. You don't even really need to have buy orders ready. Just buy it when it's okay. Because every single time it goes up, it goes back down fast. So you can live your normal life and do whatever else, especially when even if you're a trader, you still need time to sleep, time to do this, and time to do that. But if you didn't have buy orders, you just wait. So if you sold up here at 549, look at all the time you had to be able to buy at a cheaper price. You sold up here all the time you have to buy at a cheaper price. This day here, you had to get in before the end of the day, obviously, but if you did, you got the cheaper price. And of course, on this one, you had days to get into here. On this one here, days to buy back at the cheaper price. Intraday, we can see a whole bunch of these lower volatile moves at the low of 530, highs of like, we're talking like, that's not even worth it, like 7%. I don't care about that. But even then, you just got to have your sell orders ready. You can see you can buy back at any time. For if, say, I sold at, say, 5, whatever, if I sold up here, I mean, I can buy back now. I could try to wait for cheaper. I could have bought back, of course, looking at, say, something on this in the hour time frame. And look, and then again, the fast moves, they just go up, they go down so fast. And, yes, trade, and I think the only reason, and these are the things I've been meaning to say within the video. This being another one. The only reason that I really not only do but enjoy doing these videos is because I'm the only one who has anything like this. Does anyone else now basically copy what I'm doing or figure out pretty much the same using these 18s? And by the way, I'm done with this. This is just too much. There we go. Yeah, I like it better without it. Price action, only price pays. The best indicator to me is price. And understanding the numbers game. But not many people talk about my trading strategies at all. In fact, I don't even know if there's another one. It was literally just one night. I'm thinking, it's like so simple. I mean, the math is so easy. If you buy at 500, you sell at 600, and you just wait, and then you go. And well, if you sold at 600, it means it's got to go down to 5. What happens if it goes to 8? Well, then you would sell more, and then you can buy that at 600. Oh, okay. And then I just kept on doing it. I could look back at so many charts. Now, obviously, and from the get-go, I knew that, well, they're going to have to at least not really get its ass kicked badly to be a winner. Because if you got into this thing when it was a 10,000 Satoshi, 8,000 Satoshi, and now you're looking at and the price is 15 times lower, it's going to be even hard. So even if you're selling up here, buying back here, selling up here, buying back there, to handle these types of losses, and even still, if you can imagine how much your portfolio would be worth when the price was 6,000 back on April the 9th last year, which is the anniversary. It's the one it's 52 weeks ago. So from this point here, how your portfolio just trading this, even if you would still be up technically or you're barely break even, you are getting your ass kicked from point A high to point B low. And maybe part of it is, yeah, well, maybe you're barely down from this high and you're barely up from this low. Okay. And you know what? Overall, that's fine. And that's what's great about the overall strategy, especially when you can pick away at many of these types of moves. But when a market goes down 10, 15 times, you got to get a lot of these moves to compensate for the amount of losses. But then, was there going to be a time? It's almost like the dartboard philosophy. I like philosophy is the best way of putting it. Because when did this thing rally? This rallied last year, and it did so on April. And what did I call all of April last year? This went up and then it didn't go up anymore. I called it the April Fool's Rally, and every market participated in it. Pretty much the dartboard. If you took 100 different coins, the chances are that that coin in April last year did very, very well, was pretty high. As was the case the last month of 2017 into 20 and even into January of 20 or December 2017, January 2018. Altcoins on fire gains. I mean, they were just spectacular, and you can't see it on here, but from March the 1st of 2017 really into June, July, May or June for most altcoins, they just went up. This one topped on June the 5th, and then they went all the way down like this. Well, when's the next one going to happen? We had an event here. We had an event there. I named three of them. And even intra-move, there was like these September. Yeah, this one here. I thought it was September. One of the months like before, like from the May top to the December push, there was a short like a April Fool sort of rally, but it was quicker. I don't know. Some of the coins had a decent bull market rally from the high to the during its run, bear market run from May of 2007 or May or June of 2017 to its December bottom. In between, there was a move like this for a lot of coins. And when's the next one going to happen? In this case here, I mean, to see if you're looking for better price action just for where we are on the chart, you're just trying to use like moves and like like geometrical moves, or I don't know how you want to, like really Fibonacci retracement. Well, the mathematics of the calculator can really make it work. And even if I just pick up on, say, I'm not going to count this high in here. I'm going to count it from its first rally, 17,700. Okay, well, what do we got for a low? I guess this one in here, 350. Okay, let's do some math. I mean, that's just a huge move overall. So if it's going to have a big play from this, I'm focused mostly on 38.2 and 61.8. Again, this is the math 0 in 1,000 traders use. 17,700 divided by 350 to the root of those four numbers you see. There's six of them. To the root of 0.382. And then the three numbers below it. The up target is to the root of 1.618, so 161.8%. And the down target is negative 0.618. And then multiply the low. That's how this is calculated. And There's really it doesn't make sense to calculate it any other way. It really, really doesn't. It's just funny that the world of how the trading game has just completely got it wrong. But I'm not going to convince anybody else to really change. Really not. I mean, there's a few people watching it, but that confuses me. So it's 1567, 3954. I think that if it's going to have like one of those types of moves, those dart board rallies, when everything goes up, that's the next long-term level it's going to go to. So normally I'd be like, okay, I think it's going to go up like 38.2%. It's like, oh man, this is where it would be. Well, 3400, as we can see, that would be like, oh, that's a pretty good move. Well, 3400 is close to 39. That's a really good move. That's the next level post, of course, the first one shown, and that again is at 1567. I'm not going to play this. Although, again, you look at the lines that move within this level like this, it can be very profitable. Of course, the reality of it is you're gonna get many of these plays come through. You're gonna have short sales, but they're still profitable. And what do I mean by short sale? Well, let's just assume back on January the 3rd, you had a sell order in, say, for 567, right up here. 581 even, right up there. You could have got better. You could have got 667. But you technically are still going to win on that trade. And you're also going to have situations where you end up just missing completely. Like this move here. Well, I mean, you might have had a sell order at 597, 589, and you don't get this one. And then when you end up not getting the greatest of lows, say for example, you didn't quite get this buy in here because your buy order was like 405. So the last time you bought might have been like, say even at this 470 point. And then this seller, you might have had like 538. So even though a lot of them can, it's not going to always work out to you get, you're not, well, you're never always going to get the high and the low. I mean, you're just going to get what you get, and again you sell at 573, and even if you buy back at a point, well, it's stupid if you're selling at 573 to buy at 524. It's going down, as you can see. If it always comes back to where you come from, I mean, that again goes with, you need sell orders, you don't need buy orders, because you just wait whenever it has a move above the daily to get back. So back on January the 18th with a market like this, if you're selling at 590 something and you see it coming back the next day, it goes down to 500, it closes at 509. Why are you buying? It's not even really in it. Then it gets to it. So even if you buy at 487, you can maybe have your next buy order down below here or miss it. And yeah, I'm gonna end the video because this was just one because of, it's like one of the wow. I mean, I thought that in time when I was doing this stuff years ago, that I probably would have got like a decent amount of views. And I think the only reason I keep doing this is because, again, I'm the only one, and it really does work. The Fibonacci is really what I'm talking about mostly, and then in the betting strategy that I use, the trading strategy, no one really talks about it, and it works. So thank you for tuning in. Have yourself a great day. Bye bye.